Sit down with Mr. Michael Omondi. He's a financial expert. Hope you'll enjoy the conversation. Kindly subscribe, share, and invite your friends to subscribe and then listen to this conversation. Mr. Michael, thank you for your time. Karibu sana to Behind the Journey podcast.
Thank you so much for having me, Brian. I appreciate it.
Yeah, thank you so much. How have you been?
I'm good.
Yeah.
I'm happy to be here.
Yeah.
Thank you so much that you finally invited me.
Yeah.
And I really feel welcome and I appreciate you.
Karibu sana.
Asante.
I'm honored to host you tonight. Yes, you are one of the people whom I've been following keenly for the last 3 years, and you've been my inspiration in money matters, and that's why I invited you at least to come and talk to our audience to tackle this issue of money management, money markets, and savings, because it's an elephant in the room. By the way, and hope our audience will benefit from this conversation. So, Michael, kindly introduce yourself to our audience.
Thank you so much, Brian. Again, I appreciate for that introduction. Yeah. So my name is Michael Omondi. I'm a finance expert with a background in economic statistics. All right. I also do business analysis and business strategy. So in that matters, I do consulting. I offer consulting services in matters business growth evaluation and matters to do with the research, especially in this economy that we are working in currently. Yeah. So I believe that even as we go forward, even as we carry on with this conversation, many of us are going to interact and be able to understand how this is valuable. So I've been working in different industries. I've been to the insurance industry. I've been to the real estate industry. I'm currently in the consulting industry. One of the things that we do is that we offer solutions to money, because money is very important. Yeah. But at the end of the day, if you don't plan for money, there is a famous quote people say that if you don't show money where it needs to go, it actually, you won't understand where it goes at the end of the day. Yeah. Itapotea hapo katikati, and that's what we do most of the time.
So, Mr. Michael, what shaped your passion for business analytics? So,
I want to take you back a little bit.
Yes.
I want to show you why we are where we are today. And so one of the things that I came to realize, I studied the economy of our country today. Yeah. And this is the economy of most of the African countries and Africa at large. I'll give you a little bit of statistics. So you're told that many of us Kenyans and Africans at large are mostly doing micro, small, and medium enterprises, are into businesses. Yeah. Because of very simple reasons that the corporate world cannot employ all of us. For information, at least 40 to 60% of the people working in business or people actually earning revenue, they are actually into businesses. Yeah. And most of these businesses are not very large businesses. I say these are MSMEs. So I thought and sat down and realized that many of these businesses, even that they look forward to being undertaken, most of us don't have the real information that is required for us to run businesses. Of course, businesses have been run since, time immemorial. But I realize it's important that for us to understand even those small businesses that are running in the economy, that actually takes the larger bit, the larger chunk of our economy, they have to have sort of an informed decision of how exactly they need to be structured. So I actually was drawn into this because I thought these businesses need to understand, number one, they need to get the necessary information on how they need to be run. And number two, they also need to understand what works, when, where, and how, because that is important. Then it will be able to enable you to actually not to waste time in your general operations of the businesses. So we do this, we'll be able to structure businesses. We do that currently, and we believe that through this, many businesses are going to be impacted.
Wow.
Yes.
Now, Mr. Michael, what inspired you to start the Omniserve Global Consulting Company?
Oh, wow. So I didn't mention that, first of all, in my introduction, but I did mention that indirectly. So Omniserve Global Consulting is a business consulting firm. Yeah. I know many of us have heard of many of these big consulting firms. For instance, the big four. These include the Deloitte, the EY, the Pricewaterhouse companies, the PwC, and the famous KPMG, and so many others. So most of the things that they do in those businesses, the number one, they offer tax advisories. That at the end of the day, we're operating in an environment whereby we are guided by rules. Some of these rules and laws are formulated by the government. Yeah. So the government ideally is meant to provide an enabling environment upon which business is supposed to operate. All right. And some of these rules involve matters to do with tax, because then this is how government generates revenue, so that it does give you an environment from where you're able to sustain your business to operate. Of course, this includes matters to do infrastructure and so many other things. All right. And so I sat down and thought, if these big 4 firms and many other firms that are doing consulting in the business world are mostly targeting most of these big firms and big companies, the corporate companies. What happens to the larger 7.5 million MSMEs that are operating in our country? Because that's what employs many of us. And you'll be shocked. There are around 15 to 18 million of people in the workforce are employed in the MSMEs. That means if you have a very small business, it actually have at least 2 or 3 individuals.
Yeah.
Because if there are 7.5 of them, if you multiply that by 2, it gives around 15 million. So by an addition of either plus or minus 1, it actually gives you an estimate around 15 to 18 million.
Sure.
So what happens to those firms? Because many of those don't start consulting services, and they are very important. And so what actually made me to start Omniserve Global Consulting was that we were able to offer solution to the larger business world that is not tapped to by those big consulting firms, but then they are willing to grow and they also want to get informed in matters businesses. And so that is the reason I started this, so that they will be able to offer the very same services that they will get them in these other big 4 consulting firms and many other firms, that then may be able to charge them so many a very large fee that they may not be able to afford, which for us it will be able to be favorable to them, so that they're able to be structured and operate.
Wow.
Exactly.
Thank you so much. Now, what problem are you aiming to solve at Omniserve Global Consulting firm?
Oh, that's a really good question. So, you see, one of the things I realize, it's so unfortunate that we are living in a world where so many people believe that they're very informed. I tend to run away from these so-called trends, because many of us, when you walk out there, people will be telling you, especially by just looking at you, they're able to make a prejudgment. This is a Gen Z, based on how he behaves, based on how he interacts with people and so forth. But you see, sometimes it's important to understand that these so-called Gen Z, they are thought to be very much informed. They are thought to have the technical know-how. There are so many things that they lack.
They say they are leaderless, they are travelers.
That's very interesting. So I realized that even those who thought that they are leaderless and they are tribeless, one of the things I believe is that all of us at least come from somewhere.
Sure.
So however how much we deny that, then it's a different conversation. But the thing is, we realize that many of those who think that they have the information that is required to operate in certain setup, they actually don't. Because we are living in a world of trends. That someone just comes across a certain snapshot somewhere, and the government has announced that, we've introduced a certain tax, so this one will be each and every business in the coming financial year will be able to require to remit a certain amount of tax, and will be charged on their pay slips, blah, blah, blah. And then you just come across such kind of a snippet, and then you start posting it, and you reshare and you comment. And I like what many of us say, subscribe, comment, share. That's what we say most of the time.
Sure.
And someone shares this clip, and it actually, it's shared among so many individuals. It spreads out all over the world. But you see, we miss the context. So how do we get this? So we realize that apart from relying on the social media, we also need to reach out to people and give them the required information. So number one, if we give you the required information that you need in terms of what you need to operate in certain business that looks forward to employing and scaling up to ensure that they solve the whole unemployment problem in this country, they need to do that from a point of information. So of course we do so many things, but one of the things that we do so much is informing and educating business people, so that they then be able to understand how exactly business operates. By so doing, we're able to solve so many other problems that Kenyans keep on complaining about, but it's very important that they get to know. So the information problem is very key, especially in this world of snippets. That's what we aim at solving. And then if you get informed, then you're able to understand how exactly you're supposed to work.
Sure. Now, based on your profile, Mr. Michael, you came from real estates to academia to insurance. Which one challenged you most and why? Kindly.
Now, you'll be surprised. I won't lie to you. Each and every environment has its own challenges and problems. So ideally, depending on the kind of problem you're actually trying to solve, at the end of the day, you must face some challenges. For instance, I give you this. When I was back then in academia, all right, so I studied economic statistics. back then when I was doing economics, I was also doing other courses. For instance, I was also pursuing my CPA studies. Then I was also doing other courses by LX. Right? You know how those courses are demanding. You know, you have to do research. You have so many projects to execute within a certain period of time. At the same time, we were also doing hustling. We were also trying to hustle here and there and make sure that things work. Because at the end of the day, you need to pay fees. You need to survive. You need to pay bills and so forth. So you realize that at the end of the day, even in that particular environment only in academia, there are challenges themselves, because you have to lose one to gain the other at the end of the day. So at some point you have to attend this lecture, because the lecture that used to collide. You have to attend this lecture at some point in time, and then come the other side, handle the project. Then the deadlines are there. You have to meet them. It becomes complicated, but you have to come up with a problem. So that's one of the problems. When you come to the real estates, it's own problems. Because so many people, and for a long period of time, people have always believed that the real estate is a con business. Because so many people have been conned in the real estate industry. So while working at with one of the real estate industries, I want to mention, because they haven't paid for this advert.
Obviously, sure.
They need to do something. But back to the point. So many people have believed that real estate industry is an industry that is full of conship, because there are so many fake information in the existence of properties and land in some areas that people don't understand. Now, land in Kenya itself is so much highly overvalued. You get to understand that sometimes a piece of land somewhere, say a 50 by 100 land, you're told it's around 750,000. But when you do the whole valuation, you know, again, you know, this is also very theoretical and subjective. You know that land is just around 250,000. So it's a land, it's an industry that has got its own problems. But again, people have to be settled, because there are so many people who are living in slums. So you realize by that itself, just convincing a client that, you know what, it's not this way, it is ABC. It's not X, Y, Z, it's a problem itself. Come to insurance. So many people believe, you know, the whole idea of having insurance is not to make you rich. This is something people need to understand. That insurance industries are not there to make you rich. Insurance industries are there to secure your future.
Very true.
So what you think that is actually a saving, or rather an investment as we term, is not. It's just a mere saving. Of course, there are some benefits that come in, but in very small percentages. So it's saving. So many of us feel like, and again in this economy where people are living from hand to mouth, people believe that we don't have anything to save or invest for our future. But it's very important. So how then do you convince someone who only has what he or she needs to consume right now, and he doesn't have surplus to invest or save for the future, which he or she is also not very sure? Because again, life is very delicate, but we live by faith. So you see, that's a problem. So you realize each and every industry in every area has its own problems. But again, how you approach it is very important. It's not about the problem, because we're here to solve those problems. So how you approach the problems, how you solve them, is what matters at the end of the day. But I can assure you, depending on where you are, there are problems. There are problems everywhere. That is it.
Now, thank you so much for explaining to our audience very deep. So, Mr. Michael, you have a very deep background in finance, economics, and statistics. How did these fields prepare for project management?
This is very interesting. Now, I'll tell you as a matter of fact. So many of us have handled projects, and you see there are projects everywhere. Of course, there are those people who only done project management as a course. But you see, this course wasn't meant to prepare you to handle a certain specific project. Because you agree with me that regardless of the course that you pursue in campus, in academia, you're not prepared to do, or rather solve a certain problem. That's why at your very final year of studies, you usually do a research paper. You usually have a topic of dissertation. The reason why you do that is that you're able to then do a bit of research, analyze things from a factual point of view, proved by data, and then make informed decisions upon which a problem could be solved. So by that only, you're able to understand how exactly projects are supposed to be managed, because in any given project, you're supposed to have a case study from where you're making reference from. So what then informs you on how exactly you're going to handle a certain project is whether you are determined, your mind is focused, whether you're able to understand that this thing is not done so that I complete my studies and graduate and get out of campus, but it's preparing for other projects that you're supposed to face in the outside the corporate world. So ideally, first of all, my academia contributed that highly to what I did, because unfortunately the curricula in Kenya for far too long has been preparing us to get employed. But you see, when you look at the whole world, how the world operates currently, the world cannot actually take in all these other graduates to the industry.
Yeah.
So one of the things you're supposed to do is when you get out of campus, in fact, when you're still there, you need to start thinking of a project that you're supposed to work on to solve a problem. That is the mindset that we need to implant, that we need to plant on one of the citizens or the students in academia. So my course, how I pursued it is that I'm not looking forward to getting employed. Of course, there is the aspect of mentorship and serving under someone else, already able to get experience, exposure, and so forth. But you're supposed to look at it from a point of a project that you handle, that is supposed to prepare you for many other projects in the outside world you're supposed to solve. So that's how I view it. So the perception, the mindset is what is important, so that then it's able to prepare you for what you're supposed to handle in the outside world. That's really interesting. Now, many of us who are into finance and accounting, they will always tell you that we are people who deal with numbers. All right. That these are people who are supposed to focus on numbers. They're supposed to be very good at mathematics. They're supposed to have scored a plane. They're supposed to have A, B, C, and blah, blah, blah. I'm not disputing that. That is very good. But I can assure you, one of the things that is very important, that any given accountant, any person in finance, any person in statistics is supposed to come and understand quite well is the aspect of communication. Because it's never about the numbers. For instance, for the businesses that we've structured before, they'll come in with data. We have data because businesses have been operating since then, right? The Bible tells us that Paul was a tent maker at some point, and that he just did not depend on ministry. But then I came to realize there is nothing like full-time ministry in the Bible. You must be doing something at some point in time. So the thing is, you making tents. For instance, if it's Paul, all right, how many tents are you making? What is the cost of each? All right, how does this cost come about? All right, in terms of the labor, right, in terms of the material, all right, and then how are we supposed to generate revenue from this? Now I'll tell you something that is will look to be very, so many people won't take it positive. You see, when you're coming up with a strategy, especially for those who are into businesses, when you're trying to come up with your profit markup or margin, the margin is not realized at the point of sale. The profit is actually determined at the point of purchase or manufacturing, for those who are into manufacturing. So when you are, for instance, let's work with our normal businesses, all right, those who are into Juakali, for instance, those who are selling mtumba. When you are selling mtumba, one of the things you need to be very careful about is that one, when you're purchasing that mtumba before you go and resell it, that's where you determine your profit, all right? You don't determine your profit when you're selling the cloth. Right? Yeah. For instance, you are calling mtumba worth around 20,000 shillings. From the point of purchase, you're supposed to know how much profit you're going to gain from that. Yeah. But then, how do we communicate this so that it doesn't look as if we are calling other people who are supposed to consume this product? That is the most important thing. Yeah. So we're able to visualize the data. We tell you now, based on your data, this is what this business has been able to generate over the past 5-10 years. Yeah. Now, this data, this is what we're able to take into consideration in terms of the cost we are taken in. This is what you're able to take in terms of your fare, because remember, we're able to transport these products from a point where you're going to purchase them to a point of sale. Then of course there are those people who do sort of value adds. So there will be sort of value added in terms of in form of tax, of course, because then you're supposed to estimate the profit that's supposed to get from this product at the point of sale. All right. So we're able to tell you that, you know what, beside these numbers, beside your financial statements, beside blah 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 blah, this is your gross profit. Yeah. The profit is realized from this asset. For instance, if it's the margin on the assets, all right. For instance, if it's the sale, the revenue they generate, the revenue is able to generate from this particular cost. How do we communicate this then, so that then it gives you the required insight to understand whether your business is actually working well, or is likely to fail in the next 2 3 years? That's the most important thing. So it's not about the numbers. It's about what the numbers are saying about your business. So if you're not able to communicate this, then you failed. So any accountant should know how to translate the data into figures or other visuals that then communicate to what the decision is supposed to be made. This can be made through visualization tools. For instance, that's what we train people. We give you charts, we tell you blah blah blah, we tell you this is your profit, we tell you this is your cost, we tell you this is the size of your business, this is your premise. It's not working because if you add A plus B, then the cost is so high. There are high chances that you're going to take around 10 years before you break even. So you get to understand how exactly you're supposed to use this data to make informed decision. So communication is very key to any accounting.
So there's a post I saw on social media that if you buy a pair of shoes at 2,000 shillings and then you sell it at 4,000 shillings, there's no profit you've made. Do you agree with that? Because you used credit, you used bus fare, there's a lot of small costs that occur when you buy it at 2,000 shillings and then you sell at 4,000 shillings, still there's not much profit. What's your take on that?
I will say no.
Yeah.
And I'll explain why. The reason is because for me also as a business person, okay, let me talk from point of a consumer. It doesn't make sense.
Yeah.
That the actual price of a product, all right, is half the final price at the point of sale. Well, to whoever is doing the business, somehow is favorable, but you see that's an extraordinary profit.
Yeah.
In what we call consumer exploitation in business. So I'll tell you something, and this is something I heard from one of the best business people who operate in this country.
Yeah.
One Reverend Kula.
Yeah.
I know many of us know him. One of the best business people come across. One of the things that he says is that you do not need to rob a consumer for your business to be sustainable. In other words, just take what's yours, what belongs to you, and let whoever is consuming also get what is his or hers. So then each and every one of us is able to benefit out of it. For instance, it doesn't make sense that 2,000 product costs 4,000 at the point of sale. Honestly. That's robbery, all right. But what I'm saying is, as a business person, you need to understand what you get from the business, so that then the business is able to be sustainable, to scale up and be productive. So then it's able to enlarge. So as it solves your problem, it also solves other people's problem. So yes, you need something in form of profits, because any business starts with an aim of making profit. No business starts with an aim of making losses. But at the same time, those profits should not be extraordinary.
Yeah. So, Mr. Mike, you also mentor young professions. Now, what's one common mistake that they make while earlier in their career, when they start their career, maybe?
Well, let's talk about career.
Yeah.
Career choice. And I'll explain this by first of all giving my story shortly. When I was actually supposed to make a decision the course I was supposed to pursue.
Yeah.
At first I was supposed to pursue an engineering course. And I was qualified. And I actually thought that I'm going to do a course within the engineering field. But I went back and sat and said, you know what? It's never about what you think sometimes. Of course, what you think will be what exactly you are. But sometimes you actually could be what other people think about you. All right. I don't know whether that makes sense. It's not always one way. Of course, there are those Kenyans who might see social media saying, for instance, someone does something, you say, I think Brian is who he thinks he is. I've seen that comment more often. But I can tell you sometimes, it's not what you think you are. It's what other people think about you.
Yeah.
Because at the end of the day, you are serving people. For those who are into business, the most important people are your clients, your customers. All right. So what are your people saying about you? Remember at some point, even Jesus Christ himself came and asked his disciples, what do people say I am? And the disciples are able to give answers. So why was he saying this? He was saying this so that they don't understand whether what the role, the mandate that he was given by his father to execute in the world is actually working. Because remember when he was here on earth, he came in as the son. All right. He came in as the son. So as the son, he took the human aspect, the man aspect. So he was a human being. So as a human being, you sort of, there are things that you feel like, okay, I think here weaknesses here. I need to work on this, blah blah blah. I need to work on this. So you need to understand that sometimes what you think is right could be wrong to someone else. And we need to appreciate that we are living in a diversified world where people think differently. So I realized that sometimes many of these business people or people in the career, what they believe is in their minds what they think they are, but they also don't consult because they know it all. And you see, you cannot be knowing everything.
Sure.
All right. There are things that there are gaps in you that you need to talk to people so that they're able to strategize what exactly you're supposed to pursue. So one of the mistakes that I feel most career people do is lack of consultation. People don't have time to consult. People wanahitaji tu kuona, oh, this is good, let me share. They even don't get the basics, the nitty-gritties, and that's the most important thing. They don't do proper research. All right. They don't do proper background check to get to understand what exactly this thing entails. They only make a decision based on what they see up and below. But you see, what you see up and below is different from what is in the background. People say background is different. So you need to get an overview of what exactly this entails before you make an informed decision. And that is the most important thing. And I want to talk to the youth in this current world. Please, let us not be very much, let's not rush into making decisions. Please. It is not always what you think it is. Sometimes it's what other people think you are. It's not what you think you are. It's sometimes what other people think you are. And that's the most important thing. So please, consult as much as possible so that you're able to get informed decision upon which you're able to make conclusion. That is the most important thing.
Wow. So, my dear viewers, if you're a youth and a young profession, before you make any decision, kindly do a proper research and background check, and so that you may do not make maybe a bad decision that may haunt you later in your life. Send you, Mr. Michael.
That's very true.
Now, looking at your profile, Mr. Mike, you've managed high-level projects in complex industries. Can you share a time when things didn't go as planned?
Oh, that's very interesting. Now, our company Omniserve Global Consulting has 9 months so far. We're in September. Yeah, we started off in January.
Wow.
Not long ago.
Wow.
By the way. And you realize, one of the things that I realize sometimes, and we youths, again, I'm coming back to the youth because I'm just a youth, just like you. One of the things I realize is very critical and important to our youths today is humility.
Sure.
Patience and humility. Many of us want things to work in real time. It is not the case.
Yeah, sure.
You know, our parents were very patient, some of us. Some of them used to, let me not go that direction, but we realize that many of them, in their times, the time they used to live in, they used to be very patient with things. They didn't rush into things. Of course, back then, information wasn't spreading very fast, the way things are working right now in terms of technology and so forth.
Sure.
But I think they were very patient and humble in terms of how they perceive things, in terms of how they make decisions based on the information that they actually get. So there are times when you're actually given a task, but sometimes you are not willing to say, I don't know, just say no. There are times when you're actually given a task to perform, and you're not willing to say that I've done 50% of it, but the rest of it is complex. I can't do it. Let me seek solution. Or how about we just work up to this particular point? People are not very honest to confess. So I was given a certain project. I remember back then, 4 months ago, I was supposed to do analysis of a certain company. I won't mention it. It's more of a listing company. It does listing of properties and so forth. All right. So the company gave us a task to do analysis and revamp its web. All right. So then the website could be very promising and attractive to the company. Again, it's one of the things that we tell so many business people. When you're starting a business, how you brand and package it is very important. Because people don't buy the actual product. People buy emotions. People buy the feelings. That's what people buy from the product. By the way, for those who think that people actually buy products that you actually sell, that's not the case. Sometimes, because then I pose a question, why is it that we'll be having so many business people around here who are actually selling kila mtu mtumba, the same mtumba, the same. But so many people are coming to this other person, but this other person. Wameka. But they're selling the very same thing. Why is it so different? It's because how you brand yourself, the emotion that you drive to your customer, how you talk to them and blah blah. That's what matters a lot. So I was given a project I was supposed to handle to revamp the web and restructure it, and we're supposed to come up with a marketing strategy so that the company gets its capture in the market. And we realized that at some point, the task that we were working on, the company was a startup company, but when you look at the deliverables and you wanted the task to be completed the next 2 weeks, we realized this gonna not work at a point in time. So what did we do? We communicate this and we say, no, you know what? It's not going to work unless you give us extra time. But he insisted because now the client, sometimes you see clients are so difficult to handle. Someone who feels like it has to be his way or her way, and he has money and I need it very fast. But the problem is, why is it that you're enforcing and imposing us on us? Do you think there are not other people outside there able to do the very same task? So the fact that you're imposing it on us, then there's a problem somewhere. So we realized that the company had also copyright issues with the companies. And so one of the things that actually happened is it was not even registered. For those who do web designs, you realize sometimes tunaandika pale chini that we've served 20,000 clients, blah blah blah. The company has existed for the past 10 years, na kampuni kuna 3 months.
Just for PR.
For PR and all that stuff. So we wanted us to brand it so well, but sometimes we tend to be very realistic. So we felt like at that point there's a conflict of interest. But we decided to communicate and make it clear that it's not going to work, despite how we wish it to be. I know it's a marketing strategy, but it's not working for us. it did not end very well, but at least we became very honest and frank to it. So that's one of the challenges that I remember we felt. It didn't go away because we always believe when we communicate, we get to an agreement. We agree to disagree, but sometimes we don't disagree in a very positive way. So that's one of the instances that I can recall.
Wow, thank you. So you are dealing with a very delicate field, by the way, because you are dealing with people's emotions. So you have to tell the client the truth. Whenever atakasirika umwambie ukweli. Yeah. Wow, thank you so much for being for truthful. Now, Mr. Mike, how do you approach maybe a project with tight deadlines and the client has got a lot of expectation? How is your approach towards that? Yeah. Yeah. Yeah, sure.
So, of course, when we give the deadlines, right, we tell them that this project will be worked on in the next 2 weeks. We're able to tell our clients that this project will be worked on in the next 2 weeks. Alright? Sometimes they don't accept. Alright? So they feel like, okay, so I feel like 2 weeks is sort of a long period of time, a short period of time. We tell them this project will take the next 2 months. They don't agree. We tell them, they say, okay, I feel like this is too long and I have to look for another, person to do the task. And it's the most important thing is honesty. Honesty with the planning. No, everything is not going to be executed by a certain period of date. We just become honest with our clients because when, for instance, you're given a project that you're very sure, based on the estimation of the task that come in and the complexity, you can tell that's going to take 2 months. And you realize that it's almost, say, a week, and the task is only a quarter away. What do? You communicate. Because you know very well, you know clearly that if you don't communicate, someone is going to perceive you differently. So, number one, communication is very key. So, I said, for any finance person, or someone who considers himself as a statistician, right, you need to embrace the art of communication. Not just communication. Communicate well, articulate your issue, be very open. Alright, plan yourself. How do you plan? So plan your task based on how you best prefer. There are some of us who prefer starting with complex tasks. There are those who starting up with those tasks that are not so much demanding. You just try to mix up the two so that then be able to balance the two. Akichoka na fanya, asipochoka na fanya. But the end of the day is, ikifika hiyo time na hujamaliza hiyo kazi, how do you communicate with them? So communication is so those two aspects, when you focus on them, then they're able to give you the required output. Client could be very much embarrassed, could be disappointed that you did not complete the task at a certain date. But then at the end of the day, you know clearly that even if you did not complete in the next 2 months, at least as per the regulations or what he or she requires it, for instance, if he's filing returns, alright, on behalf of the client, we know we're supposed to do this and submit maybe by 7th. And we know we require it in the next, say, 2 weeks, and 7th is not yet. We can tell him, you know what, we're doing late, but not very late. Of course, from your end, we are late, but by 7th, or by 5th or 6th, we'll be able to complete this task. And the clients become satisfied. So planning is key, and then communication. Those two aspects must drive you when you're facing deadlines or you're planning your project in your execution. So I want to start from somewhere. You mentioned something to do with saving, and then you brought in the aspect of emergency fund. Now, I want first of all to draw a difference. There are those people who get into saving because probably they have surplus. Now, something that I know may not go very well with our viewers. I want to tell you, people don't save because they have surplus. People save because it is a necessity. The problem with most of us is believe that saving is only meant for those who have excess, that you have consumed, now you have something lie somewhere that sort of doesn't have use, and so it has to be switched somewhere. So that they're able to cater for us for something, sort of an emergency, not the term as a contingency in finance. Now, what is saving? Saving is the aspect of putting something aside. Let me put it in a layman's language, not able to get it well. Saving is the aspect of putting something aside for future use. Now, remember I said you're putting it aside for future use, not so that it's able to generate other revenues in terms of, in form of an investment. Because saving is different from an investment, right? And so why do people save? People save so that then, because life sometimes is not able to predict what's going to happen in the future. So you save so that in the future, in case something happens, that this is able to come and help you. Alright? You know, there's a famous quote that people say, save money today so that money can save you tomorrow. Alright? So you are doing this because it's a necessity, because not because you have excess today, but because you sacrifice and you know that tomorrow is not guaranteed. For those who are into employment, you could be employed today, but the next 2-3 months, you know that you don't have the job anymore. What happens between that grace period of using the job and getting another job? Right? If it is a business, the terms of business goes into losses. Alright? What happens if you don't have sort of profits somewhere, but then are able to be plowed back into the businesses so that they're able to expand or sort of a few issues? Those are the things that you need to look into. So, and I like how you actually pair them out. Savings and emergency. You actually make savings for future emergencies and also future unforeseen circumstances. These could be emergencies. Emergencies in the sense that things that you would not plan for, but then they come in as liabilities. But then it means that will be an emergency because there are those people saving for long term. Alright? So you just save because there's something that you are working on in the future, maybe at the back of your mind, and you feel like you need to execute it after a certain period of time. So how do you come and make it work? Because you don't have enough to do it at once in lump sum right now. So you have to put something aside kidogo kidogo, so that when the time comes, you've actually accumulated funds that are able to sort out this whole thing. So that is the whole idea of saving. Again, this is subjective, because I can tell you as a matter of fact. Like for instance, I have to be very practical. Many of us who are living today, they really don't have surplus to save. That's why I started by saying people don't save because they're a necessity. Because we cannot foretell what's going to happen in the future. Alright? And so one of the things that is important to note is, and I've heard these people say this in finance a lot, that out of your funds, out of your earnings, you need to make sure that at least 30% you put aside. For me, I don't go with numbers. It's about the practicality, alright? For me, I tell you, of course, 30% is some good amount of money. Then I go with 20%. The reason why I say this is because I believe any given policy is sustainable and is good. It only depends on the time and the season. For example, right now, telling so many business people or people who are employed to save 30% of their salary, honestly, looks weird. Alright? So we need to be very practical in terms of what we tell our clients or people. We need to be very practical with them. So I tell people, you know what? You plan yourself. How do you plan yourself? If it's possible, you can even save 50% of your salary. Because I know that those people who are already employed right now are earning, but bado kwa nyumba za mama na baba.
Really?
What do you do with that money? You don't consume because you don't have expenses or liabilities. No. Those people can even save 100% of their earnings.
Yeah.
And it's very okay. But for those people who don't have, who have expenses that come in, like business people, sometimes employed, you look at your earnings. What do you feel comfortable saving? So that after katikati pia kuna kusurvive.
Yeah.
You understand?
Really?
So if you can save 30%, it's okay. 50% is okay. But what I advise people, those who are in finance, or those who are employed, the moment you get your salary, take at least 20% of your salary and save. Now remember, you are saving this not money before spending. The moment you get your net salary kwa mkono hivi 20%, hiyo pesa usifikirie kitu, hii kwanza weka tu kando.
Yeah.
So we'll be talking about that when that time comes. But what I advise people, at least 20% of your earnings is enough for you to save before spending. And remember, when you are saving before spending, you don't spend and then save. All right?
Yeah.
And that's very important.
Wow. Thank you. Now, please, that's about saving now. Can you talk about investment? What is investment in a layman's language?
Investment is only the cycle.
Okay.
All right. But you are putting something somewhere with an aim of getting more than the earlier on put somewhere thing.
Yeah.
It could be in 10, 15, 10 or 1%. Over time, this money is able to grow over time.
Yeah.
I think there is the aspect of time. And then also why we are able to encourage people to invest is because at the end of the day, by the time you'll be consuming that amount of money, its value then it won't be its value today. Because I'll ask you a simple question, and this question could be answered by our viewers too. That if you take it back your mind 10 years ago, how much was bread costing?
25 shillings, 30 shillings while growing up.
How much is bread costing today?
60 shillings.
So for someone who was saving probably for the past 10 years, and expecting that life will be the same in the next 10, 30 years as today, is very wrong.
Yeah, sure.
So number one, you actually invest in this amount of money so that the figure generated or the revenue generated from it in form of profits or interest is able to, number one, cushion you due to the aspect of inflation.
Yeah.
That's number one. Because inflation happens, right?
Yeah.
So how then do you able to neutralize the inflation bit that is in your money that you put somewhere, so that then you're able to feel the same way that you feel 30 years to come if you were to use the same amount of money today? That's number one. Number two, you also save so that you also get to understand the revenue. So the amount that you actually generate or gain in form of interest should be a little bit higher than inflation, but then there should also be a component of a gain, because it looks like it's also a capital gain.
Yeah.
So a gain of it, so that you're able to also sort of reap a benefit out of it. Because when you invest, it's like you are into let me just call it a business. It's like you want a profit of it somewhere, profit component. And I call it profit because our brothers in Islam, they don't value the aspect of interest.
Sure.
To them, interest is.
Yeah.
So when you talk to them, when they compare interest, I mean, you'll be messing up with them. By the time it profits. So either way, the same thing. All right. So you invest so that you're able to understand, you're able to gain some revenue out of it in form of profit or interest. The one is able to cushion you from the aspect of inflation, number one. Number two, you're able to also plow it back, do other things. Then number three, you're also able to understand that you're also gaining something apart from inflation. They're able to sustain you without necessarily affecting your initial amount of money that was put somewhere.
Yeah.
Yeah.
Now, we can't talk about investment minus mentioning money market. Now, Mr. Mike, what is money market and how does it operate and who should invest in it?
Now, this is very interesting. And I know many of us know money market fund.
Yeah.
But there's something people don't understand about this. Money market fund is just one of the ways of investing that is found under a certain basket of funds called the unit trust. So the unit trust is more of an umbrella.
Yeah.
That have got so many other ways of investing. This include, number one, do you know something called a balanced fund?
No, I don't know.
You don't know?
Yeah.
And it's okay. Right?
Yeah.
And it's very okay.
Yeah.
So you realize if you look at the whole unit trust, there is something called a balanced fund.
Okay.
Right?
Yeah.
There's something called an equity fund. There is something called a money market fund.
Yeah.
So all these products are products that are actually help you to invest.
Yeah.
All right? But then they work differently. All right. So one of the things I need to tell, to talk to our viewers and let them know is that the only way to investing is not through the money market fund. But there are also other ways in which one could invest his or her money. All right. And one of them is, of course, the balance fund that I just mentioned.
Yeah.
We have the equity fund and the money market fund. So what is a money market fund? A money market fund is like a basket upon which you can actually put your money so that it's able to grow over time.
Yeah.
Right?
Yeah.
People say money working for other people. That money can also work the way you're working.
Sure.
All right.
Yeah.
But then how does the money work? It works on compounding effect. That the money is able to generate some sort of interest, all right, or profit as we term it, but then in a compounding form. And many of us are students of mathematics, Probably at some point in time you did the compounding interest mathematics. All right. So how the compounding interest mathematics work is the same way your money works. But one of the things you need to understand is at the point of maturity of your money, there are two things that actually need to be put in consideration. Number one, you won't get the whole amount of money that has been generated over time. And this is one of the things that maybe the fund managers won't tell you. And it's very important that you get to understand this. These are two business people, or the people looking forward to investing. That there are two things that you need to put in consideration. Number one, at the point of maturity, when you're doing your money, you'll be charged something you call a consulting fee. All right. That fee is usually around 15%. All right. And then you have the management fees. All right. So those two fees are very important because then they reduce the profit earned or the interest earned over time from your money. All right. But of course they reduce it, but not with the very low percentage. Now, where do we invest? How do we get the money market fund? Many of the asset management companies, they offer this product in the form of investment. So you need to understand which company or which brokerage company, they actually call brokers, where do I need to invest my funds with? And then where I'm investing this fund, is it regulated by the Capital Markets Authority? Because it's very important. If you're investing in a company that is not regulated, that means you are actually investing in a mess. Because in case Saccos Pensions, whom are you going to report to? So they must be regulated. So many of them in Kenya here are regulated by the Capital Markets Authority, the so-called the CMA. All right. And then you also need to understand the returns from it. What are you going to get from the investment? Of course, many of the companies I've seen, Britam company or Britam Insurance Company, 14% returns. I've seen APO Insurance, 14. Most of them nachezea hapo. All right. But the most important thing is, why are you investing? That's number one. Even as you put your money in your money market fund, what are you looking forward to achieving at the end of the day? All right. And you also need to consider factors such as, if I want the money today, how long does it take me to get the money at the point of maturity? And then at the point of maturity, how much am I going to get after all the net deductions have been made? Those are things that you need to know. But then, at the point of maturity, you don't start claiming your fund here to say, company may be blah, blah, blah. Because now, most of these so-called financial advisors, they won't tell you this. They'll be there because they want to sell for you this product and you want to invest and they need your money and because they want to earn from your money. All right. But they won't tell you. So it's important that you do a due diligence. Number one, whether it's regulated. Number two, the returns. Number two, the net from the maturity. And then how long does it take you to get your money at the point of maturity? Those are things that someone needs to understand keenly when investing in money market fund.
Okay, thank you so much. Now, Mr. Mike, how safe and profitable is government treasury bonds compared to other investment vehicles?
That's interesting. Now, allow me first of all to start from somewhere. Before we even talk about the treasury bonds, government treasury bonds, how do we even reach here? Now, ideally, government operates like a company. But we have to agree that government is not in the business of making profits. All right. Government is in the business of offering services to the citizenry. But you see, for the government to offer services to the citizenry, the government needs some money. All right. The government needs some money before it spends, because you cannot spend what you don't have. All right. So how does it spend the money? It spends the money on the infrastructure. It spends the money on basic services that you need. For instance, water, barabara, shule, the shule services. It needs that money. But where does the government get this money? There are two methods of government revenue. One, the government can get this money from taxes. That's number one. The taxes that you pay, and there are different types of taxes. These are topic for different day. And then number two, the government can also do development from borrowings. All right. And so taxes are actually not enough. So when the government is trying to generate some revenue, after collecting the taxes, we usually have something called the deficit. Because it's so impossible for the government to collect taxes that are enough to sustain development projects, all right, and also spend on the recurrent expenditure, because the government has to pay salaries for the civil workers. But it also has to do development. So when the amount raised is not enough to actually cater for the expenditure, the government comes into a position where it feels like it's deficient of some amount of money, where it forces something called a budget deficit. But whatever it's budgeting for, or the money generated, is not enough to cater for the expenses. So the government is forced to go and borrow money. So where does the government borrow money? The government can borrow money either domestically, within the country, or externally. From donors, that is multinational companies and banks and stuff around that. But then it can also borrow domestically from banks, commercial banks and from commercial banks through the citizens. Because the money that the commercial banks have is actually the money from the citizens or the public. All right. And so when the government is going to borrow money from the public, how does it borrow? Number one, the government can borrow this money in form of either treasury bills or the treasury bonds. That is number one. All right. And so how does the government borrow money from treasury bills, treasury bonds? The government usually advertises and it says that is meant to raise a certain amount of money, say 10 billion, to fund the budget, ABC. And usually advertises those, those bills and bonds after a certain period of time, say months, etc. For instance, I don't know whether you have your phone or your WhatsApp. If you listen on your WhatsApp, the government through the Central Bank of Kenya, because it's the custodian of the government's money, through the exchequer, on your WhatsApp, if you search the Central Bank of Kenya, you will see the Central Bank of Kenya's channel. Now, through the Central Bank, we usually have updates on what the bank is doing, because the government can only borrow from the Central Bank. All right. Unfortunately, at some point in time during the 2013-2022 government, we happened to borrow money to some other some other banks, some final arrangements that I don't want to get into. So today let's just focus on the treasury bonds. So when the government is going to borrow money, usually borrow money either through funds that are borrowed in the short term or in the long term. So the fund that the government borrow in the short term is what we call the treasury bills. The one that they borrows so that they are able to repay in the long run, called the treasury bonds. Now these bonds and bills are usually advertised by the government. The government says that we need this amount of money and you'll be able to get a certain return when you actually lend us the money. All right. For instance, the last I checked is around 12.5. Right now they're a little bit low. All right, because some of the economy is doing a little bit well. These are some of the indicators that we look up when we're trying to understand whether the economy is working or not. All right. And so the government says if you lend us a certain amount of money in the next, so that we're able to repay it in the next 3 or rather 91 days, 182 or 365 days, we're able to give a certain return. So any amount that is lent, that you lend the government so that the government is able to repay you in less than a year, that's what we call the treasury bills. And this could be repaid either in 91, 182 or 365 days. All right. And then that amount of money that you lend the government so that the government is able to repay in a period more than a year is what we call the treasury bonds. All right. Now in many occasions, the treasury bonds should have a high return as compared to the treasury bills, because it's like you're giving the government a relief. The bank is not prepared by die, so it gives you a high return. And then you've been patient with us, so part of returns is kojoki dogo. The government is also trying to be psychological. It's also trying to be humanly. All right. So how do you then invest in treasury bonds? So when you invest in treasury bonds, I want to talk about bonds because they usually have very good returns as compared to the treasury bills. All right. So how do you lend the government to treasury bonds? Number one, you have to have something called the CSD account. The CSD account is your personal account, just like Facebook or Twitter, upon which you're able to be looking at the government updates to the Central Bank of Kenya. Because many of these updates that the government gives, normally, huwezi pata kwa sub-channel zote. All right. So you need to look at your account, and your account will be called a CSD account. A CSD account in full is the Central Securities Depository. This is your account from which you'll be able to do transactions with the bank. All right. So once you open your CSD account, you just look at under the statistics option. Of course, there are different options in bars. Look at them. And the statistics are able to look at the new advertised government, finance options. All right. Of course, you're able to also see that through the WhatsApp channel. And then you look at the amount of money that the government is looking forward to lending or rather borrowing from the public. And then you're able to see how much do you want to lend the government. Is it 100,000? Is it a million? Now, mostly you usually have a capping upon which you can lend the government. All right. Now, there are those two people who usually manage those. There are two ways in which you can borrow, or rather lend. You can either lend through the primary or the secondary market. The primary market is you lend money direct through your account, is the account. But sometimes you have people called the big boys. The big boys are the people who have money. So they can even decide to lend the government pesa yote wanataka. But many of the time, when they are going to lend the government money, they should lend them money when they need very high returns. Because the government usually give options. For instance, when they are giving you money, they can either tell you you're going to have either a 14, 16 or 18 return in particular amount of money. So these big boys, because they have money, they usually bid highly. Because when you are giving the government money, you have to do what we call bidding. So how do you bid then? You bid, there are two ways of bidding. The other people bid either competitively or non-competitively. When you bid competitively, it means you're telling the government the return that you want. because the government has given you options. You can either, give them, when you lend the money, you actually either get a 14, 16 or 18 returns. But because the big boys have money, they tell you, no, we government, I'm lending you this 2 billion shillings, but I need the 18 returns. Sometimes the government feels like this is very expensive because, as I told you, the government also works as a company, although it's not in the business of generating revenue or profits, right? So when the government is doing evaluation and blah blah blah, usually have sort of a lifespan like 2 weeks, upon which people ought to have bid, and then they'll give out feedback on those people who have been qualified for those particular monies. So what I tell most of the people, when you are bidding, don't go for the competitive bidding, because when you do competitively, it means unaambia government yenye unataka. And sometimes the government also try to avoid the cost, because borrowing money is also comes in with a cost in form of interest. Because what you feel like is a benefit for you is a cost to the government.
True.
All right. So when you're going to bid, don't bid competitively by telling the government what you want. Bid non-competitively. Bidding non-competitively means whatever the return the government is going to give you, you are okay with it. And many of those who bid non-competitively are those who usually win. All right. So once you bid non-competitively, if the government is going to issue, say, a bond that is of 14, 16 or 18 coupon rate. If the government comes up with averagely and says, we're going to give you a 17 return on your money, and you have no problem with it, you qualify. Now, those who bid a return of above 17, say 18, they won't qualify for it. Because the government feels like this is too expensive for them. So they'll be scaled out. You bid non-competitively, it means you're okay with anything that the government is going to give you, you end up winning. And that's why most of those who bid non-competitively, they usually win the bid. And then now you're able to restructure, you're able to tell yourself, okay, after some period of time, I'm going to get this amount of money. You know, then you're come on 1 million, you're solid, and then some returns on it. If it's after 2, 6.5 years, 5 years, 3 years, and so forth. And then you're able to get your money. So that's how easy you can do it. So as I said, there are 2 ways of bidding. You can either do competitively or competitively. Now you can either lend the government through the primary market. That means you're lending it directly through your account. All right. Or secondary through those called the big boys. All right. They say that they go and lend the money, but through them, you go through them. It's like they are brokers. It's like a brokerage. All right. But then, of course, then for them, sometimes it should go the other way, because, for example, the government is issuing the bond. Usually issue it as at par. At par means 100. Let's say the value of the bond is around 100 shilling one share. All right. And then now you want to purchase it. Either you can either purchase it at a discount or at a premium. At a discount means cost yake ni chini kidogo. So most of the time when you're buying from the big boys, itakuja kama iko chini, but they'll sell you by the time it's being ukienda kununua kwao, unakuja kununua kwao then wakati iko chini, and then the government sometimes it finds that by the time when issue share or it issue the bonds, those people who actually wanakuwa scaled off, and then the government either inapata pesa ilikuwa inataka 10 million, inapata 8 million, and then kuna hiyo deficit because people will bid highly. So wewe inabidi na re-advertise again, nasema nataka this bill. Most time inakuja for the second time actually very expensive. It could be even more than 100 per or less than 100. So it's important to understand all those analogies, so you get to understand how exactly you do this and how you get your returns and anything that may come with it, the risks. But the government bonds actually not in risk because the government cannot default. You can imagine the government defaulting on your money.
It's impossible.
So that is it. I know nimeenda mbali kidogo, but I wanted to give you the whole analogy of how exactly the treasury bonds work. Because in brother, I break this down.
Thank you so much. At least we've now understood the concept, how it works. I was very keen from the way you explained, by the way, and I've seen it's a very tough field, and one day I'll give it a try. Thank you so much.
You need to.
One day I'll be there. I'll try. See, it doesn't have a limit, maybe.
Usually there is a capping upon which you can actually lend the money to the government. For instance, in your CSD account, as I said, when you open, there's a certain limit upon which you cannot lend the government the money. Because, again, people have to bid what we're giving it tofauti. So it cannot be your peke yake. Alright. So maybe per account you can be told this is your limit, but usually some good or we get less than $1 million or something of sort. So you need to go through your account, you need to understand how much you need to lend the government and the returns on it, and it's something that you can actually do. It's a very good investment because the returns of the government are actually very good, number one. Even good than the money market funds. All right.
And they are safe.
Then number two, they are very safe because the government cannot default on your funds. So there are two main benefits why I feel it's important to invest in treasury bonds and treasury bills.
Wow. Thank you so much. I hope our viewers are enjoying the conversation. And if you have any question, kindly drop it. We'll see. And our finance expert, Mr. Michael, will get back to you. Now, Mr. Mike, many Kenyans are saving in Saccos. What is one common what should one consider before joining a Sacco to ensure their safety of their finances?
Oh, that's a very good question. Now, before I answer that, there are 3 things I want to break down further.
Yeah.
I know my time is limited, but I try to break this down very fast.
Yeah.
You need to understand what Saccos are meant for. Because people get to invest or save their money in Sacco, but they don't know the reason as to why Saccos are actually there.
If you're there for loans, maybe.
All right.
Yeah.
And that's a good. That's a good side.
Yeah.
Now there are 3 things: Saccos. Then now we have banks. Then we have chamas. Because I've seen people paying even table chamas and table banking stuff around that. So you need to understand why you're investing in Saccos. You need to understand why you're putting your money in banks, and I don't advise people to put money in bank anyway. And then you need to understand why you play the chama, the table banking. But let's focus on the Saccos. When you tell people get into partnership with the Saccos, it's not that they may be able to get a profit on their savings over time. All right. Yeah. Because Saccos themselves are called savings and credit cooperatives. That means this organization that came in with an aim of number 1, giving you a discipline of saving. And then number 2, this will give you a benefit that if you save with that, you're able to get a certain amount of credit over time. So Saccos are strictly meant for savings and credits, not for realization of returns. And that's why their returns are actually very small. You may give a person that is giving a return of 12%, 3%, 1%. You understand? So Saccos, number 1, Saccos are not meant for investments. Saccos are strictly number 1 to discipline you in terms of savings. Because there are those people who find it so difficult to save. I remember he said many of us, we have a problem. We spend first before we save. But remember he said we don't spend then save. You save then spend. All right. So for you who want to be disciplined in saving, you can get it to a Sacco. But the second benefit that you actually reap when you're actually trying to put your money in Sacco is that you can easily get credit. All right. So the Sacco gives somebody to get credit, a certain amount of money. Of course, they usually look at certain features. All right. The metrics, the amount you've saved, and there's so many factors they look into. But don't go into Saccos if you feel like you need to put your money so that it generates interest. No. I only advise people to join Saccos if they're looking forward to say getting large amount of money to probably to invest in something else. So you're building your finances or your credibility with the Sacco, so that in the future if you need credit in form of loans, you'll be able to get it. That's why you should join a Sacco. And so how do you know a good Sacco and a bad Sacco? And again I tell you, you need number 1 to get informed in the Sacco that you're actually investing in. I remember the other day we were looking at Cusco, the Kenyan Union of Saccos and Cooperatives in Kenya. This is an umbrella that manages all Saccos in Kenya. Cusco. It had some sort of bit of kulikuwa na siasa kidogo hapa. Around some 4.2 billion were lost somewhere. They were not able to be remitted. All right. People are feeling the pesa imepotea. What am I saying? Before you join a Sacco, you need to understand how safe your money is. And how do you understand this? Number 1, do a background check. How long has this Sacco been into existence? That's the first question. And number 2, how large is this company? How many people are into this Sacco? Which kind of people does it serve? Right? First, the teachers have their own Sacco. Right? So if you just look at that, these are civil servants. Definitely you can tell up somewhere you safe up. All right. So who are the people in this Sacco? For how long has the Sacco been into existence? All right. Then what are the returns? Of course, as you save, you need to get to the returns. All right. And then what are the limits or the rules in terms of requests for credit? And then if I request for a credit, after how long am I able to get it dispersed in my account? All right. Save my money. Those are the factors that you need to put into consideration. All right. So if you do a due diligence, if you do a background check, and I tell so many people when I'm talking to them, that even as you are giving us that task of doing a due diligence on your behalf, please also yourself you need to do a due diligence on your behalf. So that then if we're able to come together, able to tell you that what we're able to learn about this particular Sacco, I get blah blah blah. Then this is what we know about this particular organization. So then what are we supposed to do about it? If the information that I got and yours doesn't have a very large difference, then, and remember, we are telling you to do this based on the metrics that I just gave. The duration, the span of the Sacco, the returns, And then who is in charge of this circle? Is it a legitimate company? Is it something that has been to exist for some time? Who are the people in the circle? Then this will be able to make you have an informed decision. But remember, don't get to a circle with an aim of generating profits. Circles are not meant to invest. They're just meant to give the discipline of saving, number one. And then number two, and this is the most important, to get credits for those who want to invest their money somewhere else. Those are the most important things.
Wow. I love the way you are going deeper and deeper into that, so that someone can easily understand the concept. Yes. Thank you so much. Now, Mr. Mike, do you think investing in a Nairobi Security Exchange still viable to an ordinary Kenyan?
Well, yes and no. And again, before I talk about Nairobi Security Exchange, allow me to divert a little bit.
Yeah.
There are different ways of investing. All right. But those people prefer investing in treasury bonds. They're lending the government money. All right. Those people prefer investing in the money market funds, one of the key products that are found within the unit trust. All right. And then this is another way of investing that is called purchase of equity. Equity or stocks. What we call the shares. All right. So there are different stock exchange markets. For instance, we have the New York Stock Exchange, the Nairobi Stock Exchange, even the biggest company in terms of valuation currently, NVIDIA, that is founded by the Taiwan guy currently based in the United States, Mr. Jensen Huang, the founder of NVIDIA. Also, now, you can invest in a certain company. The different ways of investing in companies. Now, for those people looking forward to starting businesses, one of the questions I get so much is, so where do I get the capital to start business? Because I have the business idea. I don't have the money. Now, those people who ask me that question, I usually tell them, I feel like you're not ready to start the business. Because if you're ready to start the business, trust you me, in a minute, you get the capital.
Sure.
I know this sounds very awkward. It was not very practical. But trust you me, if you know what you want to do, if you know the business you want to start, trust you me, you can get capital. All right. Because there are those people who are willing to invest into your business. And one of the ways that they invest into your business is by telling you, you know what, I'm willing to pump money into your business, but to give me at least 30% of your company so that I own it in form of shares.
Just to cut you short, that's what the Kiharu Mpindi Denyoro talked about the other day. You must not own 100% of your shares of your company.
And that is one of the mistakes that I found people.
And
I want to ask a question that so many investors ask. Why do you feel like you really need to own everything in your business?
No need, by the way.
The biggest company in the world, most of those people who own the company, the CEOs, their shares is even minimal than the people who listen to the company.
Even 5%.
Exactly.
Wow.
Because, for instance, one of the things that we do is we do business evaluation. We do evaluate your business, we tell you that your business can have this market share in the market. Alright. If you evaluate your business around 100 million. Now, what is the need of you owning 100% of the shares in your business that is valued 100 million than owning only 10% of your business that is worth around 150 billion?
Sure.
Because, do the math. I mean, you literally don't need to own your own business. Right? You don't need to own at yours. So, one of the things that we tell people is, once you start your business, alright? Sorry. So once you start your business, alright, people to pump money into your business, alright? You can tell people that, you know what, come invest into my business. And then once you invest into my business, I'll give you around shares, but my current shares are worth around 100 shillings. So you can purchase 100 shillings of shares of my company that is worth 100 shillings each. Alright? So once you invest in my business, give me money. Let me do the money, the business. If you have these shares, at the end of the day, you're able to reap dividends at the end of the operation. And you're able to understand that at the end of the day, when you do that, you're able to get so much from the business than you owning entirely 100% of the business. And that is the most important thing. Because it's not about you owning everything. It's about the value that you get out of it. So you can invite people to come and invest in your business. For instance, if you just want to start business, we can come with a very good idea. Because most of those people who are willing to invest into other people's business, they're actually willing to put money in your business so long as they can see value in it. All right. Yeah. You tell me I have this idea and I can see the vision. You can see the vision. The vision is very structured, very well structured. All right, and you can see the future. Someone is able to give 100,000 of money that is worth, say, 100 shillings per share to invest in the business. Those are around, say, 10,000 shares into a business. And this person can actually live so that at the end of the day, when you're trying to get the profits at the end of the financial year, this person actually gets some dividends out of it. But then he could lose at least, say, 30% of your business or 40% of your business. All right. So that act of people investing into is that they're able to earn share is what we call investments into equities. So you too can invest in other businesses in form of equity or stock, right? You can invest in Nairobi Stock Exchange. You can invest into New York Stock Exchange. You can invest into Tesla. But I don't advise people to invest in Tesla because, well, and I know again this one looks like is so many people are not going to buy into it. But one of the things that the US say that Tesla is one of the most evaluated business, highly valued in terms of the market cap. Currently the business, the people should invest into it in terms of the equity. But you see, one of the things I came to realize is that in form of the market capture, the dominance of the market, the US is very much valuable than many other companies in China that have allowed the US to do their businesses in their companies, but the Tesla company itself doesn't allow some businesses in China to come and do business in their company. So in other words, the Tesla market is able to capture, to tap into every market in the world, but those other markets that are doing very well are not able to tap into that market. So what happens usually, shares or equity, they usually fluctuate over time, depending on the seasons. All right. So I give a very good example. We live around the Nairobi Stock Exchange. I'll give the example of NVIDIA, so that people are not able to tell me that I'm telling them to invest into Nairobi Stock Exchange when it's actually not doing good, or I'm telling them not to when it's not when it's actually doing good. So the decision is upon you. I'll give you the information. The NVIDIA company is one of the technology companies that was owned by Jensen Huang. The last time I looked at their stocks were actually being valued at 171. They're about 177, 171. About. That means you can buy one share at 177 shillings. All right. So you can actually study the trend over time of how these stocks have been valuated, so that you're able to understand when, how, and where to invest in form of equity. And that's why now we come in. We're able to tell you that for the past 10 years, this is how the stocks of this market have been behaving. So if you invest in this business today by buying some amount of share, in the next 5 years, if you actually sell your shares, these are the benefits you're going to reap, because the shares are going to be valued higher. You want to tell you that this business has not been doing very well, and the market stock has been going down over time. But when you look at it keenly, or you look at how the business is going down, maybe their cash and cash equivalents over time, or the earnings per share, for those who didn't eat, we can tell them they are very good. Although the business is declining, the earnings per share is very good, and their cash and cash equivalent is very good. This business is likely to do very well in the next 5 years. So invest in this company. We also tell you that this company, it shares looks like too much evaluated. They are overvalued. All right. So shares that are very much overvalued, sometimes they may tend to give you a low impression of the company. All right. So you may think that if you invest in this company, the shares may continue getting higher and higher. But when you invest in them, the next 10 or 1 year, the shares nashuka chini. So you know the point at which you need to sell your shares to get revenue, the cash is very low as compared to the amount that you actually bought the shares. So you give information by giving statistics. So I won't tell you to invest in the Nairobi Stock Exchange. What I'll tell you is, come, let's do an analysis. You see how the stocks has been behaving in that particular company, and then we're able to tell you whether you're able to make a decision on whether to invest in it or not. All right. So for us, we give you an analysis and we're focused. We tell you, looking at it, this is how it's going to behave. For instance, right now, people haven't tapped into the AI so much, but people know what the AI is doing. All right. One of the companies that control the larger percentage of the AI is the NVIDIA company. All right. So we're able to tell you, because the market hasn't been tapped in so much, the company is likely to shoot as people continue subscribing into the business. So the shares are likely to be overvalued as time goes by. But remember, at some point back, when DeepSeek was actually launched by the Chinese, the shares value of the NVIDIA went down, because maybe NVIDIA controls AI, as I said, and AI, the ChatGPT and DeepSeek, they sort of play the same role, because they are all artificial intelligence tools. So when the DeepSeek was announced, some people tried to subscribe to the DeepSeek. So the subscriptions in terms of equity for the NVIDIA company went down in terms of the equity subscription. But after some time, people came to realize, okay, I feel like this is good, this is not good, because Chinese things inakujanga na mbio, that's narudi. That's narudi. And so we're able to tell you that, you know what, These shares zimekuja chini, but if you invest in it, with time zitakuja juu tena, so invest in it. So the decision upon which you need to decide to invest is upon you. For us, we give you an analysis, we predict for you, we give you options, what you need to know about investing into stocks or equity, and then now we're able to understand where exactly you need to and the benefits you're likely to reap.
Well, thank you so much, Mr. Michael. So one of our viewers has sent one question asking that, in terms of long-term wealth creation, where do you see the biggest opportunities? Real estates, stocks, Saccos, or government securities?
Now, again, I won't tell you where exactly to invest. But I feel like where to invest or the future that you look forward to in form of the best industry to tap into depends on what you're looking forward to achieve. For instance, those people believe kama hawana shamba au si matajiri. Alright? Like they really need to have something we call a tangible asset. Because land or real estate deals with tangible assets. And those people feel like if I don't own land, then I feel like I'm not very wealthy. But I can tell you as a matter of fact, land appreciates very slowly as compared to stock or other form of cash. Alright, or investment. Because even as you look forward to investing, for those who are looking forward to generating money, not tangible assets, you need to look at the ease of liquidating your cash. Liquidating your investment means how fast you can change your investment into cash or cash equivalent. For instance, if you have your land that invested in it, of course it's going to have sort of appreciation over time. But remember, we're talking about what we call the capital gain tax. Alright, the need to charge and so forth. Alright, just like any investment, like the money management fund, as I said, also you'll be charged a capital gain tax alongside the money management fees. Even in land you invest in it, at the end of the day you'll be charged a capital gain tax per emotion. So the thing is, before you make a decision on where to invest or the future to investment, what are you looking forward to achieving? If you're looking forward to achieving a gratification, because at the end of the day it's about satisfaction. What are you satisfied about? For those who are looking forward to getting gratification by feeling like a tangible asset is more worth to them, then real estate is the way to go. For those who feel like they need to invest more on liquid cash or liquid asset, then probably need to look at the money market fund or treasury bonds or treasury bills. Alright? And for those who are looking forward to probably not investing into intangible assets, those people who prefer trading in virtual coins or digital coins, maybe you need to think about the forex stuff, stuff to do with the Bitcoin and things about that. So what am I saying? It depends on your what you look forward to achieving in the long run. So once you look forward to acquiring the few in form of tangible assets, real estate is the way to go. But as I said, real estate, number one, land in Kenya is so much overvalued. So it may post a very wrong impression to you. But in the next 15 years, you'll be able to get this land that's currently at 500,000 to be 700,000, which may be a lie. Right? But those people prefer that. Again, you cannot assume that. And those people prefer maybe investing in investments that could be more liquid or ease of liquidating. They need cash very fast. They need to go for stocks. Alright? You need to go for treasury bonds. You need to go to the money market fund. For those who look forward to getting high returns, but they have no right with them. Those are treasury bonds. Some of them mature after 6 years, 5 years with very good returns. So it depends on what you look forward to achieving. Trust me, you can start paying for retirement as early as now. And this is what I say most of the time. And I've seen so many struggle with this. Many of us, it's so unfortunate that we only live today and we always say, Kesho Mungu anajua. There are some Christians, and I don't like how Christians are quoting the Bible. I feel like that's very wrong. But this is what we are saying. Planning for your pension is planning for your security in the future. One of the things we need to demystify here is that when your parents are actually investing in your education, alright, they're not investing in education because you need to take care of them wakizeeka. We're investing in you so that you can also depend on yourself and be secured. Now, even as they do that, they also need to invest in themselves so that in the future they don't keep relying on you. So walisomesha sasa wewe wasaidia kununulia chakula, shamba, nini, kila kitu. No. They should think of themselves. At the end of the day, we are living in a world where people are very self-centered. It's about self-interest at the end of the day. Now, you need to take care of your security in future. All right. So you can start investing as early as now. The bit about it is that the earlier you start it, the better. All right. Because people retire different ages depending on where you are. It could be 50 years, 55 years. With the government, 60 years. I'm told wanataka kushukisha chini kidogo. It was a debate sometimes back. But I'm telling you, you can, once you retire, there are so many things that you lose. Number one, you don't have the energy to work. All right. You don't have the energy to work. So that level right now will be the same as your activity level 30 years to come. So, and then life has stages. All right. Life has stages that, and you see, I like how the phases of human beings' lives are. That you can actually start living and investing in yourselves at different stages, because at the age of 0, say to around 12, 13, or just say 18, you're still a child and you're supposed to be educated, someone's taking care of you. And then many of us now leave high school at 18 years, 25, we're getting into campus. Now at that particular point, many of us don't after cars. Some of us get employment say at around 25, 26. Now when you get your first employment, you don't need to wait for anything. You can start investing in your pension as early as then. The bit about it is that the government has come into the very safe way of necessitating this. Number one, you can actually save through your NSSF. But you see the NSSF saving is too low. That money is so small. Because if you look at how it is structured, ideally, usually 8% of the first band, because it classified into 2 tiers. We have tier 1 and tier 2. So the tier 1 usually have to a cap of around 8,000 shillings. Alright. So 6% of 8,000 is around 480 shillings. Alright. Now the second tier comes in for those who are earning a high amount of salary. So from 8,000 units, it's capped up to 72,000 shillings. So and again 8% of that, 6% of that amount of money, the difference from the 8,000. So if you add that amount of money, you realize it's very small. It's very minimal. Yeah. So you need to actually invest in other pension investment or pension plan schemes. Alright. So that at the end, when you're actually retiring, you have enough amount of money to sustain yourself. I looked at what our parents used to do. For those who used to work in civil service, public servants, alright, kama walimu. Walikuwa wanafanya pesa yao, wakimaliza pesa wanapata after retirement, wanaenda kujenga nyumba. Alright. But what I say is, by the time you are retiring, hii pesa ya kujenga nyumba, that money is for sustaining you ukiwa kwa hiyo nyumba. Alright. That money is not meant to construct your house, because ukichukua pesa kujenga nyumba, it means sasa utaanza kupigia mtoto simu. Baba yako mtoto uko wapi? Naomba nisaidie blah blah blah. But you see, that kid also has other responsibilities, just like the ones you had when you were still at his or her age. But you see, you fail to plan for yourself, so now, right now, you become a liability to them. Alright? So what am I saying? NSSF alone is not enough. Of course, it's usually contributory, that you are contributing and your employer is also contributing some amount of money. But what happens to those who are into business? Because they're not employed. Because for you, it is better directed from the payslip. And a bit about it is usually, it's actually has some deduction relief. Right now the government has put it at around, I think 360,000 or annually. In terms of the relief, it's not taxable in other ways. All right, but you see, it's not enough. So you can actually get into other pension investment scheme. All right, most of these insurance companies offer those products and plans. You can actually invest. You can actually save by yourself. Those who are into business, don't say it cannot be deducted directly from the payslip. No, you just need information that you can actually get a company that's able to tell you, know what, you can actually save by this. You can save by this company. You just need to understand whether this company is viable. They are brokerage companies. They can broker on your behalf. They will safeguard this amount of money. And then now you need to liaise with information that is actually given by the ACI. The ACI is what we call the Kenyan Insurance of Workers institution that runs all these insurance companies for the insurers. All right. They actually gave statistics the other day, and they were saying that at least only 20% of Kenyans are saving consistently for their retirement. All right. Only 20% of those who are employed. Remember, 20% of those people who are into full employment. You know, the public servants are very okay, because for them, number one, they have their own pension plan. All right. Different from what they have in form of NSSF. This is like an addition to them. So what about you who don't have that pension plan that is given by for the civil servants? How much you want to plan your life well? come up with for those who are employed, let's say for you, and then that's not enough. Get to understand who are these companies or brokerages that are actually offering this kitty. Invest with them. And then now, how about those who are not employed? You can actually do one way. And the bit about it is that usually not very much enforceable in form of premium that is remitted when you actually buy the insurance product, say education plan. No. This is a bit different, because one of the things you realize that they have a benefit. For instance, if you contribute right now this month 1,000 shillings, next month you skip. Nobody is going to follow you up whether you contribute or not, because this is your pension plan. It's not like a premium that has to be remitted over time. Right? And then at the point of maturity, this amount again is not taxable. The government came up with a tax, amendment act the other day, that this amount is not going to be taxed. So again, it's a benefit. So you can sacrifice your time today, sacrifice the little that you have, that will become safe tomorrow, because you never know at 60 years of old whether even the kids think they are going to actually help you, they'll be there. So it's good to plan, start planning early, that you safeguard your future. So your pension is your security.
Yeah. Yes. Wow. Now, as a business consultant,
yes,
what are some of the common mistakes that SMEs and startups business make in the financial management?
Well, and this is one of the things that I've seen so much. And I want to tell you as a matter of fact.
Yeah.
Not everyone is meant for business. Not everyone is meant for business. Just the same way not everyone is meant to get into the employment world, to be employed. There are people who are very good at business. There are people who are very good at employment and just offering services and stuff around that. So one of the biggest mistakes I've seen people doing is starting a business because he or she has seen someone else start a business. Someone doesn't have information of what this business entails. Someone doesn't even know where he'll be sourcing his or her goods or what he has to sell. Someone doesn't have not done a background search of what it entails of him in terms of how he is going to get his capital, what it takes in terms of the capital management, information about this business. Someone has no idea. But because I've seen someone else selling clothes and the business is doing very well, start the business. That is the biggest problem mistake you ever do. So look, number one, this is what we are saying. Not every business person is meant to be a business person. Of course, there are outliers where someone starts off a business and it picks up and it becomes one of the successful business people. But remember, business is about the mind. Start with the mind. How you program it. Why are you starting the business first of all? Alright? What are you looking for to achieving the business? Alright? Then how fast do you expect the business to grow in terms of the scaling? Where do you see your business in the next 5, 6, 7 years? Alright? But if you start a business without a vision, without a mission, you just start doing because a friend of yours is doing very well in the business, and so you feel like I feel like I need to resign this job of mine in the business. My friend, please think about yourself first of all before getting into this business. As I said, you cannot all get into business. So if you're good at doing business, number one, the most important thing, get detailed information. Just do research, bit of research. Can even Google how this business run, what is the cost of starting this business. Do a bit of data. There are some businesses that have been existing in the past. Quite a number of them use their data. How much has been their revenue over time? What are some of their clients? Where are the most dominant? Who are the main clients for this particular clients? You know, those people have their diehard clients. For instance, if you're starting a cosmetic and beauty, you literally know where you expect to get your clients. So these are some of the things you need to understand. And then where does the business work best? The location. Alright? So you need to do some of those bit of research. This is information that you can even get from your website. I mean, you can even just get information by just even talking to your friends, just understanding how this operates. So please, before you start on a business, number one, just know, get to understand whether truly you are meant to be a business person or you can do business. And number two, get the real data and analysis of whether this business can be sustainable and whether it's able to get you to where you're looking forward to. Without the data, without information, proper information, you're likely to get into a trap that you're likely not to come out easily.
Now, as we come to an end, what message will you give to our audience about finance freedom and maybe building a better future?
And there's a song that many of us sing, financial freedom, becoming financially free, becoming stable, and stopping to work. Personally, I've never imagined that there's a point that I just sit down and stop working. Because for me, sometimes I feel like working is more fun, pleasure. Especially when you're mostly talking to people and you're solving other people's problems. I feel like you should continue doing this and this and this and this again and again. But trust to me, you need to get your magic number or your freedom number. And this is the simplest way of getting it. All right. This is how I structure it sometimes. I ask myself, or rather I can ask you, what amount of money do you think if you're able to generate every month, then it can easily sustain you without even working? That's the first question you need to ask yourself.
Yeah.
All right. And then now, the next thing you ask yourself is, for instance, let me give you a question. Looking at yourself, what amount of money do you think if you get monthly from other revenue streams is able to sustain you without working?
A lot of money.
A lot of money.
Yeah.
So give it a rough figure.
Daily or monthly?
That if this amount of money comes into my account, I don't need to work.
Money is never enough.
Money is never enough.
Yeah.
But I give you a rough estimate. Even for those people who want money to work for themselves because they want to be able to be investors. And again, we need to understand that investors, business people, and entrepreneurs, those are three different people.
Yeah.
Those are two people from different day.
Sure.
But this, for instance, if you're looking forward to having, say, 500,000 coming into your account every month, so then you're able to be very stable and don't need to work.
Yeah.
This is how you need to structure it. One, multiply that by a year. If 500,000 is coming to your account every month for the next 12 months, how much is that? That is about 6 million. All right. Yeah. So if this 6 million in the next, maybe you can look at it this way. How old are you right now? Maybe you're 30 years, say to speak.
Yeah.
So if you're 30 years, any business that is usually below 10 years is considered to be a startup business. Any business that's below 10 years in terms of operation is considered a startup. Of course, there are those businesses who claim that they've been to 8 years in existence, so they feel that they're very big. No. Whether you are valued at 10 million, but in existence for below 10 years, you are still a startup. All right. So for you to be considered like this is a business that is actually sustainable, you need to be patient for more than 10 years. Like you've been doing the same thing for the past 10 years, then that's a sustainable business. It's not a startup. But if the business you've been, of course, the aspect of doing this business for 1 year, 3 years, 2 years shift, that's not a stable business, that's a startup. If you've been doing the same thing for the past 10 years, that's not a startup, that is now a stable business. So you need to multiply the amount of money that you feel like needs to come into your account, your cash flows, every year by 10. Because then it means that 10, this business is business that can stand by its own. It's not a startup business. So if you're expecting to get 500,000 every month, for a year that is 6 million. Multiply that by 10, that is 60M. All right. So 60M is the amount that you need to invest. You need to have in form of an investment. So that then if you just sit this way, you can be sure that you're going to get this amount of money every month to be financially stable. So if you don't have investment that can be valued at 60 million, you are not financially stable.
Sure.
Yes. And you have no financial freedom. That's how we evaluate. That's how simple. So for us who are looking for 200,000, you do the same month. 100,000 every month, that's 1.2 million. By 10, 12 million. So you need to have an investment that can be valued at 12 million. So that you can just sit somewhere and say, I'm financially free. So you can do the maths depending on what you're looking forward to. What you're looking forward to generating into a business every month, get a year, then multiply by 10. Because 10, remember I said is the figure for stability. Remember I said in business that has been operating for less than 10 years is a startup. That means it cannot stand by itself. So you do a simple math. When you go home today, in our viewers too, you can do the same evaluation. Go back home, look at the amount you look forward to generating your business every month. Multiply that by a year, annually. And then multiply by 10. It will be able to give you amount of money. That amount of money is the amount of money that you need to have invested somewhere. Or if you do evaluation of your investments, it should come to that value. Then you can just sit somewhere and say, I think I'm financially free. I don't need to invest anymore. That's how easy you can do it.
I can't. You see, I'm tempted not to end this conversation because I'm really enjoying the conversation. Because by the way, anything to do in investment, savings, and financial freedom is I'm very passionate about. By the way, because I once suffered a lot of burden because of poor financial calculations, and it really messed my life. By the way, I'm trying to recover, but still not yet, because I once made one financial mistake and it really messed up my life. So I'm passionate about investment, savings, and anything to do about finance. And today I've learned a lot, by the way, Mr. Michael. I've learned that before you spend, save, right?
Yes.
Yeah, and before you
save before you spend.
Yeah,
you spend then save.
Yeah, I used to spend, then I save. But from today, I'll save before I spend, right?
Absolutely.
Wow, thank you so much. Hope you've enjoyed this conversation, our dear viewers, and thank you for your patience from 8 up to now. It's a minutes to 10 p.m. Thank you for your patience. Thank you for your time. If you have any question, kindly drop it down, and then our finance expert, Mr. Michael, will give you an answer right away. Thank you, Mr. Michael, for your time.
Thank you for having me. I
understand you are a very busy person in this city, and you created time for us and our audience. We really appreciate. We can't take it for granted. You are one in a million. Thank you so much. Your wisdom and your financial and the practical steps are really inspiring. And from today, I'm going to be a change person in as much as finance is concerned.
Thank you.
And our dear viewers, if you are inspired with this conversation, kindly subscribe, like, and share this episode. And we'll invite Michael after some few weeks to come. We talk about, because we've not finished our questions and all the topics that I had planned to ask today, but because of time, we'll invite him again in a week's time. Thank you so much, Mr. Michael.
Thank you so much.
Hope if you invite, you will come back again.
I will definitely.
Yeah,
available.
Yeah. So until next time, my name is Michael Omondi. Have a blessed night. We love you so much. Thank you. Goodbye.
Thank you. Bye.